Welcome everyone. It is 7 o'clock now, so we are going to go ahead and get started. First off, I would like to introduce myself. My name is Jennifer Kelly, and I am the lending specialist at London West location of Libro Credit Union. I will be joined tonight by some great coaches all across southwestern Ontario, as well as two very special guests from CMHC, Joelle and Lizette, who will be providing you with some great information. From everyone here at Libro, thank you for taking part in our very first credit union-wide webinar. This webinar is designed to help you, first-time homebuyers, get the answers you need to feel confident entering the real estate market for the very first time. I am just going to go over a few housekeeping items, so please just bear with me for a couple minutes here. First and foremost, you do not need to worry about muting your mic or turning off your camera. We cannot hear or see you. That being said, this webinar is your forum, so feel free to post questions and comments in the chat. There were a lot of great conversations and questions that came in during the registration process, and we have done our best to implement the answers into the presentation. But if your question was not addressed, please let us know in the chat. This webinar is meant to be interactive, so please ask questions. No question is stupid. I guarantee someone else out there has the same question as you, and you do not need to be shy, so please ask away. The question and answer chat box will remain open until just before 8 p.m. to respect time, as I know you all have a very busy schedule. But should we need to, we will continue to answer your questions after the presentation is complete. After the presentation, we will be sending out a survey sent out at some point over the next little while, where you will be able to send in any further questions or ask for a coach to contact you. The information provided in this webinar will be very general in nature. Any situation-specific questions may receive a response asking you to reach out to your local Libro. It is not that we do not want to answer your questions, quite the opposite. We would just feel it's better answered one-on-one with a coach so that they can fully understand your situation as opposed to in this kind of public forum. As I mentioned, we are trying this for the very first time, so there may be some glitches and issues along the way. So bear with us if these do come up. Thank you for boldly exploring with us as we venture into this new way of presenting. We welcome any feedback you have for us. So please, again, use that survey and send that feedback our way. Finally, if you do have to drop off early, don't worry, the webinar will be recorded and shared on libro.ca in the upcoming weeks. Now that is out of the way, let's begin the presentation. So many of you joining us tonight may already be a Libro owner, but those of you who are not, here's a little bit about us. We have 34 locations across southwestern Ontario. We opened 3 new locations just last year in London's Oldies Village, downtown Kitchener, and in Woodstock. We have over 170,000 owners, with that number growing daily, and we have over 700 employees. In 2018, Libro was proud to become a certified B Corporation, joining leaders of the global movement of people using business as a force for good. Certified B Corporations, or B Corps, meet higher standards of social and environmental performance, transparency, and accountability. Libro has a purpose-based business model. What does that mean? It means we have a purpose beyond profit, thinking differently about how we conduct our business and making decisions that have a positive impact on our owners, our communities, and on me, the staff. Instead of doing good things once we've earned profit, we earn profit by doing good things. It's an approach that goes beyond earning a profit, and it means we consider a triple bottom line: people, planet, and profit when making decisions and building on strategies. I encourage you to check out libro.ca for further information on the credit union and the work Libro has been doing, as well as more information on what it means to be a B Corp. Now, enough about Libro. As I said before, this webinar is for you. We want owning your first home a reality. With that being said, I'm going to turn it over to you, George.
Thank you, Jennifer. I want to say welcome, everybody. My name is George Napier, and I'm a lending specialist out of the Amherstburg area, which is a small community just outside of Windsor. And we just want to say thank you for the questions. There were some great questions that were asked. And one of the common questions was talking about COVID-19. Fortunately, we don't have a crystal ball about COVID-19, but we just ask that if you are in a position and you are ready to purchase a home, that you should reach out to one of our coaches. So one of the questions is asked is, should I buy a home now? And there's some pros and some considerations with owning a home. One is your pride of ownership is a pro, investment value, equity, building, lifestyle, forced savings, and considerations have to be maintenance and responsibility. So the pros of pride ownership, it's your home. You get to design it the way you want. And over a period of time, as the values go up in your home or in your area and your balance comes down in your mortgage, you build equity. And that equity can do a lot of things for you, be it doing some investments or doing some renovations. The equity is there. But one of the considerations for owning a home is the maintenance. You have to worry about how am I going to maintain this house. So you might have roofing issues down the line. You might have some. You have to maybe replace your windows, maybe do some eavesdrops. So those are a couple of things that you consider when buying a home is your pros and your considerations. Next slide, please. So pre-approval, please, we ask everyone that's looking to buy a home, please get that approval process done early. Why do you ask? Because just think, you and your wife, spouse, significant other have fell in love in this home. Then you sit down with us and you realize, uh-oh, we can't afford it. So we ask, do the pre-approval process at the beginning. And with Libro, we will actually hold that rate for up to 120 days. The industry average is about 90. We would do up to 120. So during the pre-approval process, there's a couple of things that we'll look at. How much can I borrow? How much can I afford? What might prevent me from getting approved? And what does a lending specialist look at to get someone pre-approved? So we look at your whole situation. We look at your credit, look at your assets, look at your liabilities. From that, we can determine how much you can borrow, and then we can determine how much you can afford. And some of the questions, what might prevent me from getting approved? Could be a couple factors. Could be a situation where you don't have enough down payment, or maybe you're not earning enough income, or there might be some issues on your credit report. So when we're looking at your application, we look at the whole thing. We look at the whole process, and then from there, we'll be able to coach you on what's the best situation for yourself. Next slide, please. Credit scores. What is it? Why does it matter? How do I find out my score, and can I improve it? So credit scores are used by lenders. We like to see your ability and your intent to actually pay back your creditors. We like to see a minimum credit score of at least 600. But if there is a situation where one of the spouses has a higher credit score than the other one, then we might even considering averaging out those scores. But it's really important. It's really important that you do have a satisfactory credit score, because that will just help with your application. How do you find out your score? Well, either we can actually tell you what your score is when you actually apply for the application, or you can check with TransUnion or Equifax, and they can actually provide a credit report for you, which will then get your score. And then from that, if you have any questions, by all means, reach out to one of the specialists or one of the coaches at Libro, and we can actually go over that credit report with you. And another question is, how do I prove my score? Well, there's a couple things. If you don't have credit, well, then to start off, you would actually apply for a credit card and use that credit card for a period of time to build up your score. If it is a situation where you have some outstanding collections or you have some judgments on your score, on your credit report, then we would actually, give you some strategies to look at possibly paying those off to actually improve your score. So we look forward to seeing you, and we're so happy that you're on board with us this evening. Have a wonderful evening. And now I'm going to pass it on to Nicole.
Hi, everyone. My name is Nicole Fenn, and I'm a financial service representative at our London West branch, and I do a lot of coaching, budgeting, and credit building. I also do loans, lines of credits, and mortgages. I'm going to talk about affordability. So getting that pre-approval is so important to do before your house hunting, as George mentioned. Your Libro coach will walk through the process and will ask you to bring the items to make it quick and easy. Affordability is a big part of the pre-approval process. We want to set you up for success when you make the investment of your first home. To calculate affordability, we use gross debt servicing, otherwise known as GDS, and total debt servicing, otherwise known as Tds ratios. GDS, simply put, is your housing expenses divided by your income. Housing expenses include your rent or mortgage payment of principal plus interest, property taxes, and heat. TDS is all expenses over your income. For all expenses, we use what will show on your credit bureau. For example, car payments, credit card debts, student loans, and much more. We do not use auto or home insurance, internet, cable, etc. in these calculations. As a general rule of thumb, your housing expenses should be around 30% of your total income. All expenses should be around 40% of your total income. The best way to calculate your GDS and TDS is to visit a Libro coach, and we can do that for you. Once you're pre-qualified, it is important to keep your financial picture stable. Increases in credit card balances or any new debt, loans, or other obligations could affect your pre-approval. Check with your coach before making any changes. Next, we're going to go into down payment. So the down payment is the amount of money you put towards your home. Common sources include savings. These are the funds you've been saving for your down payment. You will be asked to provide 90 days of bank statements for these. When saving for the down payment, the best place to keep these funds are a safe account that will earn you interest. This may be a tax-free savings account or an RRSP. Reach out to a coach to discuss the best option for you. A gifted down payment, these are funds that are gifted from a family member. A gift letter must be signed stating that these funds are a gift and do not need to be repaid. Proceeds of sale. These are the extra funds you receive from the sale of an existing home after paying the mortgage off, commission, legal fees, etc. And last but definitely not least, you have RRSP, tax-free savings account, and investments. You can use an investment as a source of your down payment. The same rules would apply around the 90 days of bank statements. If you are a first-time homebuyer, you could qualify to withdraw the funds from your RRSP without a tax penalty. It is called the Homebuyers Plan, and Danielle will talk more about it. So, simply put, if you put over 20% down for the purchase of your home, you do not need to take the mortgage insurance premium, which is CMHC or Genworth. If you do less than 20% down, but at least 5%, you do need to take the insurance premium. CMHC will talk more about this. The minimum payment for a down payment is 5%. And now I'll turn it over to Joelle and Lizette to talk about CMHC.
Hi, thank you so much, Nicole. I'm Joelle Jackson. I am your client relationship partner with CMHC, known as Canada Mortgage and Housing Corporation in Southwest Ontario. For those of you who may not be familiar with CMHC, or known as Canada Mortgage and Housing, let me share with you the role that we play in our Canadian housing system. At CMHC, we're driven by our belief that everybody in Canada should have a roof over their head, and that a world-leading housing system can be the cornerstone of a thriving, inclusive society. As Canada's authority on housing, CMHC's programs facilitate access to and contribute to our financial stability of the Canadian housing market. We've been doing this for over 75 years. CMHC is a government-owned corporation. It was established in 1946 to address Canada's post-war housing shortage. Since then, CMHC has grown into a major national institution, and today CMHC is the #1 provider of mortgage loan insurance. We are the only mortgage loan insurer who profits go directly back into our communities to support our housing for Canadians, and CMHC is quite proud of that. We provide access to mortgage loan insurance in all parts of Canada, including areas that are underserved, and CMHC protects our housing system in good and bad economic times. At CMHC, we are committed to housing quality, affordability, and choice for Canadians. So let's have a look at what mortgage loan and insurance is. Mortgage loan insurance protects the lender against mortgage payment default by the borrower. So in the event that you stop making your mortgage payments on the mortgage goes into default. CMHC will pay all eligible claims and costs directly to the lender. Now, like all insurance, there's a cost for these benefits. So to obtain a mortgage loan insurance, lenders pay an insurance premium. We're going to have a look at the premium chart in just one moment. The premium payable is based on the amount of the down payment that you are putting down. We refer to this as the loan to value ratio. Typically, the premium costs get added to your mortgage at closing and are included in your monthly payments over the amortized period. Let's have a look at some of the key requirements of obtaining a CMHC insured mortgage. When purchasing a home, we look at homes located anywhere in Canada. They're suited for year-round occupancy. Maximum purchase price has to be under $1 million, including the premium. It's available on covering 1 to 4 unit properties and amortized over a period of 25 years. However, if you're buying a duplex, so 1 or 2 units, you must put 5% down. If you are purchasing anything above that, a 3 or 4 unit property, you must put 10% down, and all properties must be owner occupied. Now let's have a look at an example of a minimum down payment you'll be required depending on the purchase price of the home. So there's two-step process here. If you look at us looking at a home at $500,000 as the purchase price, you would need a minimum of 5% down, so the down payment would be $25,000. However, if you exceeded that $500,000 and you were looking at a home of $600,000, there's a two-step process. It'd be 5% of the first $500,000, so we saw that $25,000. And the remainder $100,000 would be at 10%. So that'd be $10,000. So to purchase a $600,000 home, you would need $35,000 down as a down payment. Now let's have just a quick peek at the premium chart so we can see what the premium charge would be. So as you can see here, in our looking at the loan to value, we're going to focus on the 90 to 95% premium. It would be calculated at 4%. So on the next slide, let's have a look at your options by comparing if you were to save 20% down or 5%. So as you can see in this scenario here, if we use an average $450,000 purchase price for a home, if you were to go conventional, put 20% down, you would require $90,000 down to buy your first home. However, if you look at the bottom scenario, if you were to buy the same $450,000 home, your 5% down would be $22,500, and I mentioned the premium would be 4%, so that $17,100 would be added back into the mortgage, and so you can see that the difference there of savings would be $50,400. So it just shows you the benefits of having CMHC support you in your first-time home. However, to qualify for a high-ratio mortgage, we use what we call a rate stress test. Let me explain how this works. So the borrower must be qualified for the mortgage loan using the interest rate, which is greater of that contract interest rate. So that's the interest rate that your credit union would supply to you, or the Bank of Canada's conventional 5-year fixed rate. Let's take a look at the example so you can get a visual of what it looks like. So let's look at this example. Let's say you're purchasing a home for $300,000. It's amortized over 25 years, and you are getting a contract rate from the credit union Libro at 2.50. Your monthly P&I would be $1,327.77. However, we would look at the testing you on the Bank of Canada's rate, which is now at 4.94. And your monthly payment would be $1,713.77. So since your P&I payment for 494 rate is higher, we must therefore qualify you using that higher mortgage payment amount. That ensures that we know that if something were to change in interest rates, that you would be protected. Now, to finish up, I think it's important to mention some of the other key programs CMHC supports when purchasing your first home. The first one is our Energy Efficient Home Program. When you purchase a home or an energy efficient home, or you make any energy efficient improvements to your home, CMHC will help by offering 25% rebate on your mortgage loan insurance premiums. I would suggest just speaking to a mortgage advisor if you are purchasing any one of these type of homes, and they can guide you through the process. Our next one, our CMHC Next program, is our CMHC New to Canada program. There's no minimum period of residency and there's no additional fees. It's available for permanent and non-permanent residents, and our standard premiums apply. CMHC prides itself in Canadians, including new Canadians, with information and tools to help you make good informed housing decisions. You can find a lot of our step-by-step guides at cmhc.ca to assist you in your home buying process. In addition to English and French, with just a click of a button, you can actually convert a lot of our material into 7 different languages for your convenience in understanding all the steps it takes to buying a home. Now I'd like to pass you on to Lizette, who will share the federal government's Equity Shared Initiative that also was launched to support our first-time buyers in buying their first home. Lizette.
Lizette, you may be muted. We cannot hear you. Are you there? I think we may have lost Lizette. Joelle, are you able to take over the next few slides?
I'm here. Sorry.
Oh, there she is. Hi, Lizette.
It wouldn't unmute. Technology at its best. All right. So what is first-time homebuyer incentive? So the government of Canada launched the first-time homebuyer incentive with the goal of making homeownership more affordable for first-time homebuyers, just like you. So through a shared equity mortgage, the government would contribute 5% towards the purchase of an existing home. In the next slide, we see that when you're purchasing a newly constructed home, the government would contribute 5 or 10%. So if it's an existing home, you can get 5%. If it's newly constructed home, you can get either 5 or 10%. The result of these contributions are lower monthly mortgage payments because you're going to be reducing the mortgage because you've got a bigger down payment. The incentive needs to be repaid in 25 years or when the property is sold, and it's repaid. It could also be repaid at any time without any penalties. Now, the repayment amount is based on the fair market value of the home at the time of repayment. And I'm going to show you an example of how this works in a moment. So this means that the government shares in both the upside or the downside of the property value. Now let's see if you're eligible. So to be eligible for the first-time homebuyer incentive, you must be either a Canadian citizen, a permanent resident, or a non-permanent resident legally authorized to work in Canada. Now, with a combined qualifying income has to be a total of $120,000 a year or less. Okay, so the maximum is $120,000. The minimum required down payment is 5% for the purchase price of $500,000 or less. And like Joelle said, if your purchase price is more than $500,000, you'll need to put in an additional 10% of the amount in excess of $500,000. At least one borrower in your household must be a first-time homebuyer. So who's considered a first-time homebuyer? Well, first and foremost, those who have never purchased a home before, obviously, are first-time homebuyers. But others may also be eligible, including those who've gone through a separation, a divorce, or a common law breakup. And you could also be eligible if for the last 4 years, you've not occupied the home which you or your current partner owns. So that means that if you bought a place and you've rented it out and you're not living there for the last 4 years, you're still considered a first-time homebuyer. Now, are you curious how the first-time homebuyer incentive works? Let's break it down in our next slide. So your total borrowing, meaning the mortgage plus your incentive amount combined, is limited to 4 times your qualifying income. All right, and these formulas might seem a little bit ominous right now, but trust me, I'll show you the calculator and it does it all for you, okay? Your mortgage must be eligible for the mortgage loan insurance. So that means it must be a high ratio mortgage. So it means you cannot put more than 20%. You have to put less than that. So 19.99% is the maximum down payment, which is your down payment of 5% plus the incentive 5 or 10%. Okay, so the government of Canada is participating in the transaction with you, which is why the incentive will be registered as a second mortgage on the property. Now, there are, however, on this second mortgage, there's no payments, it bears no interest, and again, the maximum term is 25 years. So let's look at that example for you. Let's assume that you're purchasing a $200,000 home and you receive a 5% incentive equivalent to $10,000, right? 5% of $200,000 is $10,000. Now, if your home value increases to $300,000 by the time you do your repayment, your payback amount would be 5% of that current value. So you would pay back $15,000. So the cost of that for you was $5,000. You received $10,000 and now you're going to have to pay back $5,000. Okay, but remember, you're also going to be saving on the mortgage payments. So there's a cost, but there's also a saving. On the other hand, if your home value decreases to $150,000, then your repayment amount would decrease to $7,500. Right? So you received $10,000 and now you only have to pay back $7,500. And with decreases in value, that's always a possibility throughout different areas in Canada. Now, are you interested in learning about how to apply for the first time home buyer incentive? Well, to begin, first, I want you to visit the webpage, which is at www.placetocallhome.ca, and review the available information and resources thoroughly. Once you've assessed your eligibility and made a decision that you do want to apply, then you simply need to read, print, and sign 2 documents. The first is called the Shared Equity Mortgage Information Package, and the second is the Attestation and Consent Form. Both of these can be found online. Next, you'll need to take these 2 signed documents with you to your Libro Credit Union lending coach, who will then submit the application to the program administrator on your behalf. And once that's done, your lending coach will notify you of the status of your application for the incentive. If your application is accepted, then you must notify First Canadian Title of the name of the lawyer that you've chosen to close your deal. And don't worry about all these steps, because your Libro coach is going to be there throughout the whole process and will make sure that you don't miss any of them. This will need to be completed at least 2 weeks prior to the purchase in terms of calling First Canadian Title. Now, this will allow the incentive to be activated and required closing documents to be delivered to your lawyer in time for your closing. Now, let's look at a calculator, and I see it's already up, right? This is going to show you when you go onto the website, there's 3 steps. So there's the introduction, where you look at do you qualify as a first-time home buyer, and if everything is copacetic, then you click on Let's Get Started. And here you're going to fill out certain information. You can input your annual income. So in this scenario, I put before taxes, my income is $120,000. My down payment is $25,000. My property type, and there's going to be a drop-down menu. You can click on what type of home you're purchasing. In this case, it's an existing home at 5% incentive. So then I click continue, and then I'll see that the mortgage information is next that's required. So I'm going to select my amortization. So again, there's a drop-down, but it defaults to 25 years because that's usually what people will get, a 25-year mortgage. The mortgage interest rate, whatever rate it is that you're getting from Libro, that's the rate you can put in there. And then the payment frequency, how are you paying it? Are you paying it monthly, bi-monthly, accelerated payments? There's going to be a drop down. You select the one that works for you, and then you click calculate. And then on the next slide, you're going to see it's going to tell you what's the incentive amount, the mortgage, the monthly savings, and your maximum purchase price. So in this case, you can see that you are going to receive $25,000. Based on your scenario, you'll save $178 a month, and you can go shopping for a home at $500,000. Okay, that would be your maximum purchase price. So bringing this information, working this information out, then you can work with your Libro coach, and they will be able to tell you exactly what you could be pre-approved for, which is what was talked about earlier. Okay, Jennifer, you have the stage. Thank you.
Thank you so much, Joelle and Lizette, for all of that great information. Up next, we have Danielle.
Hello, everybody. Congratulations for making it this far. I know you're having a lot of information thrown at you today, and here's some more. So I'm Danielle Kimmel, and I'm a lending coach with Libro, and I'm coming to you live from my basement. And I'm here to tell you about Libro mortgages and why Libro. Let's start at the top. We're cooperative, and we call our clients owners because you are. And as a result, you get to share in Libro's profits. Yes, you heard that right. You'll receive profit sharing and a free premium account. Libro mortgages have all the same fun features you can find at other financial institutions. Flexible payment schedules, variable rates, which mean the interest rates can fluctuate with the prime lending rate, fixed rates, which means your rate is guaranteed for the duration of your contracted term, protected variable, which is an exciting new product that we're offering that gives you the benefits of both. So you get the benefits and potential savings of a variable rate with the peace of mind that your rate won't go above a certain percentage, like a fixed rate. On all Libro mortgages, conventional or insured, we also qualify you using a stress test, just like Joelle had mentioned. This is to ensure that you're ready and able to handle a significant rate increase should it happen over the life of your mortgage. And a lot can happen in 25 years. Additionally, our mortgages are portable. So if the time comes when you've fallen out of love with your current home and you're looking to move to another, we can pack up your mortgage and move it too. So Libro approaches lending a little bit differently. Our coaches want to see you debt-free and paying yourself instead of paying off debt. We'll help guide you to make informed and smart decisions on when and how to borrow. We will always keep your goals front of mind and help you become prosperous, however that looks for you. Next slide, please. I love this one. Okay, so if you're a first-time home buyer or recently separated, as you can see, there's some great programs in place to help get you the keys to your new place. The Homebuyers Plan allows you to withdraw from your RSPs without being taxed to buy your new home. There are some stipulations, but nothing too crazy. Your maximum withdrawal amount would be $35,000 per person who qualifies. And it's more like you're lending yourself your down payment from your retirement savings, because you do have to repay the funds to yourself within 15 years to avoid taxation. You have 2 calendar years after the withdrawal to start, and we can help set you up with one of our wealth advisors to ensure that you don't have any surprises come tax time. Contributions must be in your RSP for at least 90 days prior to withdrawal. Now, that being said, withdrawals can be made up to 30 days before or after the date you take possession of your home. So who qualifies? You must occupy the home as your principal resident within 1 year of closing. The home cannot have been previously owned by you or a spouse, because then you're not a first-time home buyer. And it only applies to a home in Canada and Canadian residents. So no homes in the Caymans, sorry. The program is also available to home buyers who have experienced a breakdown of marriage or common law relationship, so they can buy, build, or acquire the interest or right to the separated spouse or partner in their home. The home buyer needs to have lived separately from their spouse or common law partner for at least 90 days to qualify. Next slide, please. Purchase plus improvements. I have a personal love for this program, and I'll explain to you why when I'm done. The Purchase Plus Improvements mortgage makes it possible to get an insured, low down payment mortgage, meaning you're putting less than 20% down, that covers the purchase price as well as the cost of repairs or renovations. So go ahead and buy that fixer-upper at a great price and turn it into your dream home, and do it all with one manageable mortgage and a minimum down payment. If you're going with a low down payment mortgage, it may take a little bit longer than a conventional mortgage or uninsured to build enough equity to access for renovations. So this is a great way to ensure that the work you want to get done gets done in a reasonable time frame. So after purchasing, you can only refinance up to 80% of your home. So it's something to strongly consider if there's any work you'd like to do on your dream home. The offer to purchase should be negotiated with a financing condition of obtaining a purchase with improvements mortgage. Then you'll send the offer to purchase, just like normal, with the qualified contractors lists of improvements and cost, or quotes, so we can submit it all with your application. Your down payment required will be a minimum of 5% of the new amount, so your purchase plus improvements. CMHC or other insurers' appraisal system confirms the cost of the improvements and reflects it in the as improved value after the work is done. The funds required for the purchase are advanced to your lawyer for closing, and the funds for the improvements are held back by us until the renovations are finished. Once the inspection confirms the work is completed and you didn't buy a pony and a bouncy castle instead, the remaining funds are advanced to pay your contractors. I personally had a Purchase Plus Improvements mortgage for my very first home. And let me tell you, it was a power of sale. So the owner had disappeared and it was in terrible condition, but we could not walk away from the price because it was absolutely rock bottom. So it took a load off knowing that we could rip out the smelly carpets and replace them with new flooring, paint over the stained walls. Guys, if I could share pictures with you, you have no idea. And other various upgrades that needed to be done without draining what crumbs we had left in our savings accounts. But anyways, that's enough of my musings. It's time to pass the mic to the awesome Ashley.
Thanks, Danielle. My name is Ashley, and I work out of Libro's new downtown Kitchener location as a lending coach. I am a fairly recent first-time homebuyer, and I am excited to share some important information that I knew absolutely nothing about prior to buying my first home. So first things first is finding a real estate agent. Finding a real estate agent is an important step in the home buying process. So what does the real estate agent do? A real estate agent represents you and your best interests. They are there to advise you about market conditions, conduct walkthroughs, home conditions and value, and provide guidance and assistance through the process of buying, selling, or leasing properties. Where do you find one? Friends and family are a great resource to find a real estate agent. Libro coaches have a list of realtors that they work with often as well. Libro also offers a real estate agent referral program that allows you to earn some cash back if you purchase a home with them. If you're interested in learning more about this program, you can reach out to a Libro coach in your area. So what should you consider when looking for a real estate agent? It is important that you work with someone that is familiar with the area that you are looking to purchase in. It is also important to make sure that you work well with the agent that you select and that you are on the same page. Do you want to do all the legwork on realtor.ca, or do you want your agent to provide you with the homes that they think you would like? When I was buying my first home, I had a great realtor that respected that I knew what I was looking for and that I wanted to do all of the legwork. It was important to me and my husband that our realtor was not aggressive or pushy. We knew what we wanted in a home would take time to find. So whenever I found a home online that I wanted to see, she would facilitate the showing and was there for the entire process of making an offer and beyond. It is also important to remember that the real estate agent takes commission for the sale of the home from the seller. So now we will move on to home appraisals and inspections. So what is an appraisal? An appraisal is an unbiased professional opinion of the value of a home and is used whenever a mortgage is involved in the buying, refinancing, or selling of that property. A qualified appraiser will create a report based on a visual inspection of the home using recent sales of similar properties, current market trends, and aspects of the home to help determine the property's appraisal value. The borrower usually pays the appraisal fee, which can typically be several $100s. It is also important to note that when the appraisal value is lower than expected, the transaction can be delayed or even canceled. So what is an inspection? So a home inspection is for you as the buyer, while an appraisal is typically for your lender. An inspection is best completed by a licensed and insured home inspector. The fees range in between $300 and $500. They inspect a home for visible faults, flaws, substandard systems that require major repairs or upgrades. So why is it important to have a home inspection done? So how many home buyers climb up onto the roof, crawl into the attic, and examine wiring? And if you do decide to climb into the attic, do you even know what you're looking for? My home inspector had me stick my head up in the attic and I saw rafters and fluffy insulation. That looked fine to me. But little did I know he was looking for disrupted insulation to determine if there were mice. I recommend that you hire your own inspector and go with them for your inspection. You will learn so much about your new home. Although they can seem costly at the time of purchasing, home inspections often pay for themselves. Repairs that the inspector finds can be negotiated into the sale of your home, and your report will be full of maintenance information. The inspector will provide you with a very detailed report that will outline your home's condition, the estimate equipment lifespan, educate you on your home's required maintenance, and will also allow you to negotiate the resolution to any problems into your deal. So after you have all that and you have a deal, you'll have to meet with the lawyer. So what role does the lawyer have in my home buying journey? So a real estate lawyer will be an expert in their field and reasonable in their rates. You can ask friends, family, your Libro coach, or even your realtor for referrals. The lawyer will help complete the title search, taxes and utilities, code compliance, registration, certificates, and documentation. They will also meet with you to explain and sign the documents. So for the meeting with the lawyer, lawyers prefer to review the offers before you sign. You pay for a lawyer's services because they are experts and will guide you through the following process. Your first meeting is a discussion that will typically happen over the phone. You will talk to the lawyer about the title, the insurance, money that you are required to pay so you can close, how you will get the keys, and the responsibilities of you as the purchaser. You will then meet with the lawyer for a final meeting who will explain and sign the documents with you a few days before closing. You will deliver any money you are required, and this would be a great time to discuss a will and get a head start on some estate planning now that you are a homeowner. When you meet with the lawyer, they will also discuss closing costs. Closing costs are approximately 2% of the purchase price. So if your home that you are purchasing is $400,000, you can estimate that your closing costs will be approximately $8,000. That seems like an awful lot of money. So what is included in those closing costs? It can be legal fees, your home inspection, your property appraisal, land transfer tax. There is a first-time homebuyers credit that you may qualify for that you can easily search up on Google to see what you would qualify for, and if you do qualify. Title insurance, mortgage insurance. So if you put less than 20% down and you do require mortgage insurance, you will be responsible for the PST, so the provincial sales tax on the insurance premium, and then any adjustments. And how should you plan for these closing costs? So look at how much you can afford and ensure that you are not using all of your savings for your down payment. You're going to hold back some savings for closing and then purchases for your new home. So after that absolute information overload, I will pass it back over to Jen.
Jen, you are muted.
I sure am. Okay. Hi, everybody. Hi again. So yeah, the next steps. Now what? The next steps, you really you want to book an appointment with that Libro coach. We are so excited to now be doing many virtual coaching appointments. It's a new one for us as we're adapting to these new times that we find ourselves in. So we can chat together from the comfort of your couch. But most importantly, you need to get the conversation started. It is never too late to sit down and review your prosperity plan, learn how to manage a budget, and find out ways to save for that down payment. A Libro coach will be with you every step of the way during the home buying journey, and then throughout the next phase of being homeowners and becoming mortgage-free faster. So with that, we are going to move on to a question and answer period. So I'm going to put my fellow coaches on the spot and get them to answer your questions as they've been coming in. Thank you so much for those of you who have shared questions. So I'm going to jump right into it. And I think actually, Joelle, if you are still on the line, I think I'm going to come to you. We've had a couple of questions regarding sort of that new to Canada program. So we are, the question we have here is, if I'm new to Canada, can I get a mortgage if the down payment is higher? What percentage would be ideal for a down payment if I don't have any sort of credit score, I'm assuming here in Canada? And then another asks, how much of a down payment is required for international buyers? So I know CMHC has a great program, Joelle, so if you want to maybe expand on that a little bit more, that'd be great.
Okay, so for non-permanent buyer, it's 10% down. For a permanent person that's come into Canada and is working here as a Canadian, they can actually put 5% down. Non-permanent, it's a single family dwelling home, so one unit is all that's allowed. And I missed, can you just repeat one of the other questions? What was the other?
The other question, how much down payment is required for international buyer? The other one was can I get a mortgage with it? Yeah, I think they're kind of in this credit score if they don't have a credit score.
Okay, so we would accept an international credit report if they could grab one from where they're coming from, that they can share that they've established some sort of credit. Those would be, I think those are the three that I think covered off.
Perfect. And I'm actually going to keep you on, Joelle. Okay. The next question for pre-approval, how do you calculate the stress rate percentage? I know that's not up to CMHC, but I think I don't know if you can give us any sort of insight on it, or if you're just kind of like us and as the reports come or as the news comes out, that's we roll with the punches. But yeah, I don't know if you have further to extend on that.
Yeah, just to give an indication of how the stress test is calculated, it's usually taken by the Bank of Canada's rate, and that is set every Monday, and it usually follows on the following Wednesday, and then the following Monday is when we look at that rate stress test. We don't tend to see a lot of up and down with that stress test rate, so you're pretty good out if you've got a pre-approval. But if you do start to see rates move on the 5-year fixed, I would definitely be revisiting my Libro coach to ensure that the stress test rate hasn't changed when you're getting pre-approved. But again, we always look at that higher interest rate when qualifying to ensure that they can qualify at the pre-approved amount that they're looking to purchase at.
Jen, you're muted again.
Okay, I'm just going to keep myself off mute. So there was a part B to that question asking if the stress test applies for someone willing to do a 20% down payment. So here at Libro, we do use the stress test for every mortgage application that we do, regardless of your down payment. So the answer to that is yes. The next question I have here, I'm going to reach out to you, Danielle. If I, as a first-time homebuyer, am part of an investment group seeking to purchase an investment property, must I use my first-time homebuyer, I'm assuming, incentive towards that property?
Yeah, that's a good question. So there's so many facets to the first-time homebuyer program, but the simple answer is yeah. So you're a first-time homebuyer, whatever that capacity looks like. If your name is going on title for a property, you've bought that home for the first time. Hopefully that answers that question.
Yeah, I'm going to agree with you, Danielle. As far as I know, as long as you're on title of a property, you no longer qualify for the first-time home buyer incentive if you go to purchase another property, unless in the case of a marital breakdown, as you had stated in your presentation. So I think we are on track with that one. So the next question we have here. So I'm going to come to you, George, on this one. If I have started the pre-approval process online with a major bank, is it too late to get pre-approved with Libro or elsewhere?
No, it's never too late. I mean, you just want to use caution when if you're jumping from different financial institutions, because each financial institution is going to pull a credit report, and by doing so, there is a possibility that it might drop your credit score. So to answer the question, it's never too late to actually reach out to Libro to see if we can get you pre-approved.
That's great. Thank you, George. So there's another question that came in regarding closing fees and what to set aside for that. I hope Ashley did a fantastic job, I think, of covering all that should be included in that. So I think we can skip that one. Okay, that one, first time home. Okay, so I will bring this over to you, Lizette. Viewer has indicated that they feel the first-time home creditor program seems to create an incentive for the government to perpetually increase the cost or perceived value of a house in order to turn a profit. They see this as problematic. I'm not sure if you want to respond to that with some of the benefits of the program.
Sure, no problem. So the First Time Homebuyer program is a $1.25 billion program over 3 years. And any profits that we get from increased in value of homes basically is there to cover the cost of running the program. And if we are profitable, the hope is that we can continue the program past the 3 years. So it would go back into the funding. I hope that answers their question.
Thank you, Lizette. And I think what a lot of people should consider is that extra savings a month may be the difference between qualifying and not qualifying. I have seen that happen before. Just having that extra 5% to go towards the down payments reduces the mortgage payment to bring their debt servicing, as Nicole talked about, in line, so that it may make the difference of owning a home and not. So something to certainly keep in mind as well. I think, Danielle, I'll bug you for this one. So I have heard that for a lot of properties that go to a bidding war, the home inspection and appraisal is often foregone to help secure a quick sale. This seems obviously like a bad idea for a buyer, but if you're competing with people with big money, do you have a choice? So obviously we're seeing that quite a bit these days here in London. I'm not sure about other areas, but certainly the bidding wars are alive and well here. So I'm not sure if you can respond to that one for me.
That is a fantastic and complex question for a lot of reasons. Thank you for asking it, because quite frankly, that is our climate right now. Often, especially if it's a really, really good deal, you are going to be entering into a bidding war. Making sure that you're working with a real estate agent that you trust is key, first and foremost. They'll know the neighborhood, they will know whether or not it's worth it. As your coach, I always hesitate to go in firm because there's a lot of moving parts that could cause additional stresses or challenges if you go in with no conditions just to compete in a bidding war. If it's the question of whether or not you should have an inspection, there are ways to get that inspection done prior to placing an offer, because you definitely want to make sure that your tush is covered, for lack of a better term. So hopefully that answers your question. It is a complicated one that you're going to be hard pressed to find someone to say, yes, absolutely, go no conditions to win a bidding war.
Yeah, Danielle, I think you summed that up perfectly. As she said, there are ways to do those inspections in advance. You can, a lot of these bidding wars, they're holding off offers to another date. So your realtor may be able to get an inspector in there quickly and do one before you make an offer. It's certainly worth trying if that becomes, if that's your situation. So we are going to, George, coming to you. If my employment is permanent part-time, but I work full-time hours, what is used for income on the pre-approval?
That's a good question. Excuse me. What we would look at is we would do a 2-year average just to see what your income is for that 2 years. And we look at your notice of assessment just to see what your income is. And then we'd base that decision on that. Just we want to make sure that you have that consistency of having that income over the 2-year period. Hopefully it answers your question.
Thank you, George. And actually we'll stay on you because this is another income question. If you were looking to, if you were looking for a house in a different city that may require you to change jobs, how does this work for a mortgage approval when they base it on your current income? So how do we look at future income?
Sorry, when you want to answer that, ask that question again, sorry?
Sure. If you are looking for a house in a different city that may require you to change jobs, how does this work for a mortgage approval when they base it on your current income? So I'm thinking if you're, say you're relocating to another city, you're looking to purchase a home, but you're about to start a new job, and how do we figure out the income when you haven't actually started yet, I think is the jive of that question.
Well, to answer that question, we'd want to see you in that position at least 90 days. You know, and then from there, we will look at your income, you know, based on, you know, where you're at, when you're going to be moving 90 days, but you actually have to be in that position at least 90 days before we would look at your application. Just because we want to make sure you pass that probationary period. You know, the workaround could be if you can get a letter saying that, you know, they're overlooking the probation period, we can consider that. But we definitely would want to see you in that position at least 90 days. So we would base it on the lower income versus the higher income. If you came from a company that you were making more income, we would definitely look at the lower income because we want to make sure that you can afford your dream home.
Thanks, George. And I think further to that, I would just say that is what I would consider kind of a situational based question. It does not hurt to meet with a coach. Everybody's situation is different. For example, if you're moving to a role, but you've already worked in that sort of industry for many years, we very well may be able to use the income, and it really is all dependent on the applicant. So really just meet with a coach to find out if where you're going to fall with that situation. Okay. George, I'll come to you again. Sorry, I'm really bugging you a lot in a row here. Can you provide some insight into the effect of the pandemic on the prices of the housing market?
Well, like how I started in the beginning of the presentation, you know, we don't have a crystal ball for COVID-19. Wish we did. But that's also going to depend on your area. Where there's demand, you're going to see that there is going to be, you know, increase in values, increase in prices. You're going to see bidding wars. So it's basically going to depend on your area. Your area will dictate where those prices go, and so will that demand.
Thank you, George. All right. Okay, so the next question, and I'm thinking it might have to do with, because it came in anonymous, so I'm not sure if it's the same person, but I think it is. So what if my name is not on title? I believe Danielle, this is the viewer that's asking about the first time home buyer incentive, or sorry, the first time home buyer withdrawal program, whether if they're not on title, whether they still would qualify. So Danielle, I'll let you respond to that. I think from what I understand, the best thing to do is actually pull up the application. There's kind of a questionnaire, answer yes, answer no, and it will kind of tell you whether you would qualify for the program. But I don't know, Danielle, if you want to take that on.
If this is the same person, sounds like you've got some fun plans coming up. This is kind of a unique situation that would involve, you know, having good solid discussions with your lawyer, having good solid discussions with your real estate agent. Again, like I mentioned before, there are various different components of being a first-time home buyer. There's the RSP program. There's the program that I'm losing my train of thought here that Lisette was discussing. So we really want to look at that individually and see if there would be concessions, but generally speaking, the programs are pretty black and white, cut and dry. But I would encourage maybe making an appointment with a coach to go over the full application process with you to see if it would be something that you could make work. Sorry for that incredibly vague answer.
Well, because of that, I'm gonna keep with you.
Ah, cool. It's like a hearing from you, Jen.
Do seasonal or self-employed incomes qualify? At Libro, we're going to speak only to Libro at this point. Other institutions may have their own rules surrounding it, so just keep that in mind.
Whenever we're looking at income, be it regular salaried full-time, which is becoming increasingly rare, or commission or self-employed or seasonal, really what we're looking for is to find consistency and pattern. So we would encourage, and we would require 2 years tax returns, and we would take a look and seeing what your usual trend is. And if it looks like, okay, you're seasonal, what's happening on your on season? What is your income supplements for the off season? Do you take side jobs and part-time jobs? Do you have clear savings and budgeting in place to supplement your income through the remaining of the year? It would be a situation that you would come and sit down. We'd take a look at what your full budget is for the 12 months of the year, because you're still eating in the rest of the year. You still have bills to pay the rest of the year. What does that look like? And we can make a good plan with what you have, whether it's you're buying now or buying a year from now, will help you reach that goal. Again, super vague, I'm sorry.
No, that was great, Danielle. Fantastic. Okay, so the next question, Ashley answered for us, but I wonder if anybody else has the same question, so I'm going to read it out. Tyler asks, do I need to have a lawyer before making an offer on a home? Ashley's response, great question. There is no need for a lawyer until you have a signed purchase and sale agreement. Once you have a signed offer, your realtor or Libro coach can help refer you to a lawyer. So great answer, Ashley. No, you do not need a lawyer until we are ready to close the transaction. So that is a great answer, Ashley. So George, coming to you. Is there any advantages to buying a newly constructed home versus an existing home?
I guess that would come down to your preference. I mean, it's a good question. It would come down to your preference if you want a new home. Of course.
Oh, you muted, George. George, you muted.
My apologies. As I was saying, it all depends on your preference. If you prefer a new home, I guess it has everything bright, shiny, new, or a home that requires some work. It all also depends on what you qualify for. So there's advantages and disadvantages. I mean, you have an older home, it's a more established area. Newer home, you know, might.
We lost you again. George, we lost you.
Can you hear me now?
Yes.
You know, I don't know what's going on with my mic, but it's saying I'm good to go. So just to answer that very quickly, it just all depends on your preference. And it actually all depends on what you qualify for in terms of the price range for that home that you're looking for. And we can all do that. We can find that out for you with the pre-approval. And from that pre-approval.
And you're gone again, George. You might want to unplug your mic and come back.
So
but
I'll just make it quick. It just all depends on what your preference is.
That's great, George. And I would just point out for new builds, keep in mind you will very likely need an appraisal with that type of application. So that is something you want to take into consideration again with those closing costs. Since there is no existing home, it's really hard for Libro to put a value on it. So we do leave that to the professionals, which does involve an appraisal. You're likely looking at about $400 to $500 for that. So something to keep in mind when you are budgeting. Okay, so Nicole answered a question. We did have a question surrounding if you buy a lot, how does it work to finance constructions? I will just say construction mortgages are very, very in-depth and could probably be a whole webinar all on their own. So for that particular one, Nicole responded with purchase a lot. There are different down payment requirements based on the lot, if it's serviced or not, and reach out to a coach. 100%. This one, you do need to have a one-on-one conversation. Lot is involved with buying a lot. Next, when Libro checks for pre-approvals, does it reduce your credit score? Ashley responded, anytime a credit guarantor pulls your credit, it does slightly reduce your credit score. It is nothing to worry about though, as long as you are not constantly seeking credit and having it pulled regularly. So great answer there, Ashley. So it is about 8 o'clock now, which we had kind of plans to get you all out of here by that point. So I just wanted to say a very big thank you for joining us this evening. We hope that you found the information you received useful and you feel you are better prepared to start that home buying journey. There has been a lot more questions that's come through, so we will continue to tackle those, but if you must go, again, thank you, and we really hope you enjoy the rest of your evening. But if you are willing to stay, we will continue to address the questions as they've come in. Okay, so if someone is looking to purchase a condo or townhouse that would have a monthly condo fee, how does that factor into the mortgage approval process? Nicole responded, we do use condo fees, property tax, and heat payments in the ratio calculation for a condo purchase. We do only use 50% of condo fees. However, you unfortunately have to pay 100% of condo fees. So you want to make sure that you are budgeting accordingly for that when you're thinking whether you can afford it, because what we say you qualify for doesn't necessarily mean that's what you can afford. So that's where the budget is a big point. As a self-employed worker, how many years of income is required to get a pre-approval? Nicole responded, typically we require 2 years of tax returns for a pre-approval for a self-employed income. Again, there's lots involved with self-employed income. So reach out to a coach if you are self-employed and have them look at your situation and see what Libro can do for you. Okay, opportunity to purchase grandparents' home nearby to live in. What advantages, savings does this bring in? Nicole responded, but maybe I'll get Danielle to talk about that. So it's not just me talking for the next 15 minutes. So there could opportunity to purchase grandparents' home nearby to live in. What advantages, savings does that bring?
Oh, but you're so lovely to listen to, Jen. I mean, aside from the obvious, as you know, your grandparents pick the price, so they decide how much they're going to want to ask from you. The benefits is you know the home. Some of the downsides might be you don't know the home and you need to have an inspection, because there are things that are lurking in the corners that are with any house purchase. But the main, I guess, benefit would be, you're familiar with the seller. You might get a lot more honesty about the property and what might be entailed in owning it, as well as they decide how much they want for it. And they're not so much pressured by the market values.
Thank you, Danielle. Great question, Brandy. So I'm going to actually come to you, Nicole, because I haven't bugged you at all. So I think it's only fair. And you answered this question, so I'm going to come to you. Brandy asks, how early should I meet with a coach if I'm not expecting to be ready financially to buy for a couple more years, 3 to 5 years?
Yeah, so I suggest meeting with your coach as soon as possible. We can help you get your down payment into the right account to earn you the most interest, possibly save you from your interest on that money being taxed by the government, get you on the right track to possibly learning how to budget to own a home. So meeting with your coach as early as possible is always my suggestion. It'll get you ready for that big purchase.
Thank you, Nicole. So the next question I'll just read out. Do you have to pay back the first-time homeowner incentive over a certain period of time, or can it be done during the resale of your home? Nicole gave the right answer there. This must be repaid within 25 years, or if you sell the house before the end of that 25 years. So it does have a time frame on it. And also keep in mind, and actually maybe Lizette, maybe I can ask you, because I'm actually kind of curious, that incentive, what happens if you refinance the home?
If you refinance, it does not trigger a repayment because the second mortgage can be postponed again. So you can just refinance your first mortgage, but this has to sit second. So you don't have to repay it if you're refinancing.
Perfect, thank you. See, we're all learning something tonight. Okay, can you get a loan or a mortgage for buying land and building an off-grid home? So as Nicole said, Libro does finance lot purchases and construction mortgages. Again, off-the-grid homes, lots of gray area that there are some properties that are restricted, at least here at Libro. So that is definitely something you want to reach out to a coach about and talk about your individual situation, because it all depends, I guess, is the best answer. So actually, I will come to you, Joelle, on this one. There has been some changes, so if you want to go over them with the crowd. Have debt service ratios or minimum credit scores been impacted by COVID-19? And you are muted. You're muted.
Sorry. Can you just repeat that for me? Sorry, Jennifer.
Sure. So we have a question. Have debt service ratios or minimum credit scores been impacted by COVID-19? So I'm guessing we're talking from a qualification standpoint.
CMHC did make some changes to our qualifying on hoping that one applicant that applies for a high ratio mortgage with CMHC has at least a 680 beacon score on their credit, and we just maxed out the GDS TDS, the gross debt service and total debt service, at 35 and 42, and it's not really because of COVID, it's really just because of the debt loads in Canada. So we just want to ensure that people aren't overextending themselves when they're buying their first home. We believe that if we're getting you into a home, we certainly do not want you to lose that home. So we want to be very cautious and make sure that when you're getting in the home that you have extra money to maintenance that home. I think that answers the question.
Thank you, Joelle. George, I hope your mic is working better, because I'm going to come to you for this one. Which would have a better effect on mortgage approval, to have a larger down payment or less student debt, assuming credit debt service falls within affordability range?
Well, let's see. I guess we will look at the debt service ratio to determine would it be best to actually pay the student loan off, or is it best to keep it? I mean, we looked at that individual situation, because it might be best that to free up your cash flow is to pay it off and put less down, because if it's depending on if you're putting 20% or less, will depend on if you have CMHC fees. So we would look at your situation and devise the best strategy for you. Is it best to pay the student loan off, or should I just keep it and work it that way?
Thanks, George. And I think, yeah, I would just extend on that. I wouldn't make any drastic decisions about paying things off until you've actually sat down with a coach and taken a look at your financial picture. When we look at monthly payments, a student loan typically has a fairly low payment, so it might actually not have a huge impact as opposed to having a line of credit with the same amount. We do use a higher qualifying payment for that. So I wouldn't say meet with a coach, find out what it makes sense to do before kind of taking those steps. All right, next question. It's a first-time home buyer withdrawal question. So Danielle, coming to you. If you are considering building a home, would you still be considered a first-time home buyer? How does a mortgage work with that? You're building a home.
All right, that's a great question. I would follow that question with another question. You're building the home. Is this the first home you're ever buying? Because if you owned a home previously, whether or not you're building a home doesn't really reset the clock. So if your first house you have ever purchased is a new build, then yes. If you're in a house right now where you're on title, no. So hopefully that helps a little bit.
Perfect. Thanks, Danielle. Okay, so how would my pre-approval be calculated if I was to have a family member co-sign? George, let's come to you.
Well, first we would look at yourself individually to see if you can qualify on your own, and then determine, if you can qualify or not. Then we would look at that family member, look at their whole situation. So we'd look at both applicants, but probably yourself first to see if you qualify, and then then we will look at possibly bringing that second person into the equation.
Perfect. So Selena asks, and George, you responded to her, so I think I'm just going to have you read that out loud. I sued my landlord and lost 5 years ago. Cannot find proof of the case closure. Will this civil suit prevent me from qualifying?
Yeah, that's a good question, Selena. First of all, I would say you definitely want to get a copy of your credit report, either through Equifax or TransUnion, just to see what is actually showing on the report. If it's something that you've lost and you have not decided you're going to pay that, then it could affect your application. But we definitely would want to, speak to you about, what the situation was and what is your future plans, because the worst thing we'd want is that the company to come back at you, they start garnishing your wages, and then it actually affects your ability to pay back your mortgage with Libro. So I say, first off, check with your credit report, get a copy of it, and then check with your courthouse, and then meet with us, and we can look at a strategy for you.
That's great. So I believe, unless there's any further ones coming in, I believe that is all the questions that have come through. So I think that may wrap up our evening. So again, I just really want to thank everybody for joining us. There will be again a survey coming out shortly that we encourage you to provide any feedback, good or bad. Unless it's about me, then it better all be good. And ask any questions that you feel didn't get answered, or if you want a coach to reach out to you, you can do that through the survey as well. So again, big thank you, and we hope you enjoyed your evening. Have a good night, everybody.